Hi, Jonathan Newell by Financial Partners, looking at investment markets. Huge volatility has returned to the global equity markets, really started by sort of a couple of factors. Firstly, the latest jobs data out of the US was much weaker than anticipated. Jobs came in at 114,000. They're expecting around 185,000. But also as well, there was some quite big revisions to previous months. The unemployment rate also nudged up to 4.3%. So that sparked renewed talk about a potential recession in the US. Now, added to that as well, you've got the unwinding of the sort of carry trade, which really been in play for the last sort of 30 odd years with the extremely low or negative interest rates in Japan. Added to that, you've also got the rotation out of the high-tech stocks into the broader market. So that really saw a huge increase in volatility and some really big moves. On one day, the Dow was down over 1,000 points. Although on Monday, the Japanese equity market was down over 12%, but on Tuesday, it recovered 10%. So there are some big swings out there at present. But again, putting that into context, 1,000 points, given where the index is today, is only around sort of 2 to 3% down. Now that's obviously impacting interest rates as well. In the US, the 2-year got down to 380, currently around 4%. And the 10-year in the US as well got down to 380, currently around 397. Now, there was some talk and speculation about a potential emergency Fed rate cut. That seems to be off the table, really. But all eyes looking at the Fed meeting now in September for a rate cut. And then potentially one more before year end. In the background, you've still got the earnings season coming through in the US, and on the whole, most of them are pretty encouraging. Certainly in the big tech sector, the latest report, Meta and Apple, they were pretty good results. In the presidential election as well, Kamala Harris is polling pretty well actually, and now appears to be ahead of ex-President Trump. But what is more interesting is that it appears that some of the more moderate sort of Republicans are now looking at supporting the Harris ticket rather than voting for Trump and the Republicans. And with the DNC next week, it will just be interesting to see how they poll after that. And obviously the run up to the November election. Now we talk of sort of slowdowns and recession in the US. Oil has fallen dramatically. Did get down as low as $73, but currently back at around sort of 75 and change. Now in the UK, the Bank of England did deliver on its rate cut, but only cut by a quarter point. And potentially there's quite a few more in the pipeline to come. Although at the moment UK is sort of experiencing some pretty major social unrest and quite a bit of racial tension as well. Now in the EU region, the latest CPI number, that was actually slightly up at 2.6, which wasn't really in the script. It had been coming down pretty aggressively and appears to be well under control. So the ECB will probably be waiting to see the next figure just to see if it is one sort of blip here for 1 month, or whether it is actually a trend of inflation just starting to grind a little bit higher. Now CPI in Australia came in pretty much in line, which did help the Reserve Bank. They came out and left rates unchanged, although potentially a bit of a hawkish statement accompanying it. With potentially no rate cuts in Australia until next year. So the cash rate remains at 4.35. But again, it would be interesting if the Fed started to cut and other central banks started to cut, whether Australia will be dragged in and will be cutting as well. Now here in New Zealand, the latest unemployment data, that was pretty dire. Unemployment rate is up to 4.6% from 4.4%, and we'll be looking to go higher in the coming months. Now this was pretty well forecast, with the Reserve Bank keeping rates high with the OTR at 5.5. But potentially the economy really is struggling now. Liquidations are increasing, and you would expect the Reserve Bank to take that into consideration when it meets next week. But probably unlikely to see a rate cut next week, but certainly September is on the cards. And interestingly, the major high street banks are already starting to see cuts in mortgage rates. Also a little bit of encouraging news for the dairy sector though. The latest dairy auction, that was pretty encouraging, with prices up slightly. So still looking for a payout of around $8.25 to $8.40. Now, if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.